Hey, I'm Liz, the editor of Trading Today. Voz is the glamorous one, I'm the other one. We have been cleaning up in our free e-letter with crash profits. As the market tanked, I sent out 10 separate profit alerts, all for free. 158% on GM, 78% on CX, 100% on RVLV, 96% on Redfin. I could go on, but I won't. As great as Trading Today is, and I admit I'm a little biased, this is just a tiny taste of what our experts are doing right now in this crazy market. For instance, in CJ's Night Trader service, he just made total cumulative gains of 1,601% in one day on June 13th. Mark closed out cumulative gains of 927% on that same day in Profit Revolution. And while this market was tanking, Kenny was using his VWAP magic to find intraday trades to the upside in beat-up names from Redbox to Roblox. Point is, these guys know how to trade in a bear market and make a crap ton of money. And right now, with the recession looming, that's more important than ever. You need to have multiple ways to capitalize in this terrible market, and each one of these experts has a specific edge to help you protect yourself and profit right now. So we've extended our Bear Proof Your Portfolio event, that's a tongue twister, where you can get $500 off any of our research services. Mark, CJ, Kenny, Voz, whoever you want. This offer expires at midnight, so you will want to hurry or you will turn into a pumpkin. Just call Gabe at this number and $500 off. Boom. And no, Jared, I was not talking to you this time. I'll see you guys soon.
And it's time that we bring in Tom Gentile to the main room with Power Profit Trades for the next 1 hour. Let's bring him in 5, 4, 3, 2.
Hey everybody, Tom Gentile. Welcome to Power Profit Trades. This is our Operation Surge Strike edition. Glad to have you here. Hope you got your coffee in hand as we're heading into the lunch hour. I got a full hour today to talk to you about what's happening in this market. Got a bit of a bounce here. I wonder if we may have hit the bottom yet. We're going to take a look at a checklist that we've prepared for you on market bottoms. We're also going to talk about Brutus. We're going to talk about what's Brutus. I'm not talking about Brutus, the evil character on Popeye, right? I'm talking about Brutus, my strategy, my system for picking volatility during trigger events. We're going to talk about that too. We have a trigger event happening today in LNER, so we're going to take a look at that as well. I want to share with you what the best strategy, and this is not me, this is our members talking. What our members are saying the best strategy has been for this last earnings season, all right? And it might not be what you think it is, because somebody might be saying bear. No, it could be something more than just being bearish. So we're going to start things off today looking at some major earnings, economic reports. We'll take a look at the markets are showing us. And if I got some time, guys, I want to look at your requests right here in the chat. So let's go ahead and get started. Eric, sounds like you got a little background noise. Are you in a subway, or where are you at today?
It's not that bad, the noise in the background. I think that's just Brandon across from me. He's pretty loud and animated all the time. But no, I'm over here in Baltimore in the main office, which is always nice to visit everybody. Yeah, Brandon's loud, and we're going to have to hear him on the show as well today. But I think everyone will be all right. How you doing? How was your weekend?
Dude, it was all right. I mean, you know what? We had obviously had an extended weekend due to the holiday. Mm-hmm. And so I wasn't ready for that. I wasn't ready for 3 days with no markets, but here we are. It's Tuesday, ready to rock and roll again. But hope you guys all enjoyed your extended holiday, June 19th, Juneteenth. Anyway, so let's go ahead and start off with something from Oppenheimer Analysis, okay? And so what we're looking at, and I'm going to tell you when I look at this checklist is telling us, at least from their data, that we're at the 70% area to the bottom, all right? But, I got to tell you, based on a lot of data that I'm seeing, and I'll get back to it in a moment, is it possible that we did intently hit a bottom last week? All right, let's go through the Oppenheimer checklist first. Eric, you have that on the screen?
You know I do here for you, Tom. We got it right up
Awesome.
Here, the market bottom checklist you're going to start us out with.
Yeah, so you know what, Eric, why don't you just give them an idea of what, where this came from. We didn't create this, did we?
No, we didn't create this. We were sourcing this. This is actually coming from the seekingalpha.com news is where this is coming from. It says right underneath the image right there. If you're ever wondering where we source it from, it's down below.
Yeah, awesome. And I want to let people know that, when we find something that's outside of our own network that we feel like it's something it's worth your attention, we're going to bring it to you. All right. So we pulled this from Seeking Alpha. And so what you see here, let me break this down because this looks like a lot of data to me. And so if you're looking at it for the very first time, our eyes, folks, always tend to go to the right. We want to see the end. All right. That's why we read books from left to right. Here in America, we're reading books from left to right. And we're always trying to get to the last chapter to either see who done it or get to the end to find out what happened. So even with checklists, we always tend to move to the right, and you see a lot of yes, no over there. But before you look at these yes, no's and you go down where it says yes, 7 out of 10, let me explain what it is you're actually looking at here. So this particular market bottom checklist is broken into 2 categories. Number 1, market and internal breadth, and number 2, sentiment and correlations. So with market and internal breadth, you have 5 different areas there that try to dictate whether or not we've hit a market bottom. And they are the S&P 500 peak to trough decline, right? The peak to trough duration, how long that lasts, the NYSE new 52-week highs, right? And what we're really looking at is the target to the bottom, the 52-week lows, or what's not hitting 52-week highs. Any stocks in the NYSE that are above their 200-day moving average, and small cap 200-day deviations. So if you look at these, first of all, that S&P 500 peak to trough decline. We're looking for a target of 21% or negative 21%. We're at negative 24%. So that is a yes. We've actually more than moved through that decline. The duration, the reason that's a no is because the target duration is usually 7 months on the decline. We're only 5 months in to this peak to trough decline that you see here. So for those of you that are time-based traders, you might want to hang out a couple more months conservatively to see if the bottom is actually in based on this data. Now, New York Stock Exchange net new 52-week highs, that's at a target we're looking for is minus 1,000. Right now, we're at a minus 648. So that particular market breadth is a no right now on market bottom. All right, NYSE stocks above 200-day moving average. Well, you look for less than 20%. Right now, we're at 18%, so that's a yes. And small cap deviation, we're looking for at least a minus 20%. We have a minus 22%. That's a yes also. Now, the second half of this checklist is all sentiment and correlations. So there's a bullish composite index, which basically goes out there and it's where you run out and look at sentiment, how many people or how much of a particular sector of the market is bullish. When that gets to less than 20%, that means that you've got a contrarian indicator. This is at a 15% right now, so that's yes. Investors' intelligence bull bear, right? What we're looking at here is anything that's less than 1.0, that's a 0.7, so that's a yes. The VIX is greater than 30 right now. It's peaking at 39, so that's a yes. Put call ratio. This is a 10-day average of puts over calls, and what we're looking at here is anything that's greater than 1.00. Right now it's at 0.98, so that's a no. And of course, the 3M correlation for the S&P 500, well, that has got to be at a greater than 50%, and that's at 0.52 right now, so that's a yes. That's why you have 7 out of 10 on the checklist. Now, if you're like me, Eric, I don't know how your grades were in school.
They were all right, Tom.
I'm telling you, if I came home with a 70 on a test, I was going outside. I was not banished to my bedroom. And so, 70 was a passing grade where I grew up. And so if I had 7 out of 10 right, it was good for me. So that's why I'm saying that we might be seeing a bottom right now in the markets, right? So let's think about this. The big Fed move, the big granddaddy of them all that we've had so far is now behind us. That's one big thing. The other thing is that what I'm seeing is more and more gurus, if you want to call them, Main Street media, all bearish, bearish, bearish. You know, the one thing I learned when I was on the floor at American Stock Exchange is that when everybody's screaming bear and the stock does not continue to sell off, the market does not continue to sell off, that's the end of the bear market. Now, I'm not saying 2 days, Friday and today dictate what's going on. But when we're going to look at some charts here next, and we'll get an idea of what's happening in these markets to see where the pressure points are that could tell us that the bear market could be subsiding. Now, there's some other stuff we got going on. We got existing home data out this morning, and then we got earnings after the close from LNER. So housing is definitely in focus. We're going to take a look at what's going on with LNER in just a few minutes. And then I want to go back to LNER and talk strategy with everybody. Now, it was also a huge volatile weekend for cryptocurrency. Bitcoin went below 20,000, right? And we went and pierced those highs from 2017, which, this is an area where what I like to call it a flush out, right? There was a pretty good flushing that occurred over the weekend, Eric, as we dropped below 20, above 20, back below 20 again, above 20. And so we'll see where that ends up going. But I talked about this last week, is that we very well could see that flushing happening really soon. What we really need to see now with cryptocurrency is just, I think we need to see here a series of dead space, or we need to see that V-shaped bottom happening. Right now, it doesn't look like the V-shaped bottoming is happening. We would need a huge, huge amount of buy. I would love to see a day where Bitcoin and Ethereum and its counterparts all end up 20% or higher on the day, right? That's very likely to happen here at the end of this bear market for crypto. It's just a matter of when. But let's go ahead and start things off real quick like we always do every week, guys. Let's go ahead and go through stocks, bonds, currencies, commodities, and then I want to take a look at the stock that is in question today, which is LNER. So if you take a look at my screen, I have QQQ up, ready to rock and roll here. What you're looking at in the chart, guys, and I'm going to just mention one more thing. I'm missing one big piece of my puzzle. You guys all know what it is. It's the big mouse. I'm looking for the big mouse right now. There it is on the screen. And so what we've got here, folks, is we've got those with the Qs. I've got the highs that occurred back and we're looking at this year. All right, we're only going to look at year-to-date highs today on the chart. So I've got year-to-date highs tapping out just above 370, 371.19 on the QQQ. We came all the way down Thursday and hit fresh lows for the year at 271.39. Little bit of a bounce on Friday, a much bigger bounce today, and we're adding to, this is what I like to see, we're adding to the morning print, right? Morning print started at 9:30. It's 11:45 right now, and we're building on that. This is not one of those gap higher and drop down days yet. We still have several hours in the market today, but so far looking pretty good for the Qs. Where are the pressure points for the Qs right now? Just above 290. Just above 290, I've got this dotted line area of, we're going to call it resistance. And so when you see that area there, that's just showing where a lot of the support came in on the way down, right? There's 3 levels of support here between May and June, which is now going to be building up as resistance. We get above this, 309.51 is the area on my screen, which is the 38% retracement for the Qs, right? Let's continue on. And I'm going to move now to SPY. Same thing. SPY has had highs. Remember the rebound? We got it into January. Everything was looking really bad. And then we got that big rebound that took us into the end of March. I think it was April Fool's when we hit the high at 461.53 on the S&P for this year. We've dropped down. Friday hit a new low. But today, got a bounce. And not only a bump, we got a bump and run. A bump and run is where we bumped up at 9:30 and we're continuing to run up on the highs. We'll see what the day brings for us for the SPY. IWM is the iShares Russell. Okay, this is the small cap index. And so it too had highs earlier in March. Well, really right at the beginning of April, 211.69. Came all the way down Thursday, hit a low at 163.88. Again, double day bounce, where we're seeing the markets bounce up. Now, what happened with IWM I thought was interesting is we opened, we sold off a little bit, and the buyers rushed in and pushed this thing higher. That's the only one of the three that I see that did that. Kind of pulled back a little bit, then the buyers rushed in. We'll see where that ends up going. All right, that's the stock market. That's looking at the Qs, the SPY, and the IWM, which is the iShares Russell 2000 index. With Russell, you don't have any. It's the most volatile of the three right now because it is small cap. The other thing I've noticed is it's got no dotted line area of resistance because of the move down and back so fast. So we got to look at 182.14. 182.14 is that 38% retracement we're seeing on the IWM. Bond market, not going to spend much time here. This thing is still kind of downtrending, but over the last week, we found some good support down here below 110 on the TLT. This is the iShares Barclays 20-year Treasury ETF, right? We had a lot. See that red line? That was a lot of volatility. It came in ahead of the Fed meeting, but it has since subsided. Get a little bit of a buildup today, not much, but could we be building up for another possible event? We'll see. The cash market, UUP, this is the double dollars index, all right, moves twice the speed of the US dollar. This is an index that goes against a basket of foreign currencies. Now, it has been as low as the mid-25s earlier in the year. It topped out last week at a high of 28.16, a little bit of a pullback today, trading at 27.82, still high. Cash is still king right now in the market, but it is off that runaway move that happened at the beginning of June, right? Pullbacks on UUP, 27.16 for those of you that like to trade the cash. How about oil? Here's one that got real interesting last week. So oil at the beginning of the year, USO was trading at 62. I had targets of 85 on this. Those of you who've been hanging out with me here, whether you're at Monday Morning Live or whether you're hanging out with me here on YouTube, you've heard me discuss this number, 85. That was that kind of gravity area that I was looking at. Well, and the reason I mentioned 85 is because we came up, we hit the 88 level, but we closed right around 85. That was back on March 8th. Since then, we had that big pullback that took us back down to the 60s. And then we started moving sideways. We broke out of that sideways pattern around the middle of May, all right before Memorial Day weekend was ushering in what I like to call the official start to summer. And so we've got that move up. 91.99 is what we saw roughly 2 weeks ago. Big pullback on Friday as we saw oil drop even double digits in some of the categories that make up oil or gas, right? Ended up closing down around the 83 level. Well, guess what? We've popped up a little bit. We're at 84.65. But look at that, 84.65 and 85 was the area. Now, I had a position in oil. I was talking about this months ago, transparent in oil. Ended up tripling that position. I took it off, right? I took it off last week before the drop, right? I didn't take it off up here, guys. Didn't take it off at 91. I was taking it off somewhere in the 80s. I took that off. Anyway, it worked out in my favor, ended up as a triple. So now I'm on the sidelines with USO looking for the next potential buying opportunity. Okay, here we go. This is the one that we talk about every week. This is the one that's the mystery to everybody. I'm hearing Main Street media start talking more and more about GLD. And what they're doing is, I think they're filling air because the gas has come out of cryptocurrency. And so everyone's looking at, well, where's the safety going to be in the market if we keep dropping? And I keep hearing gold, silver, precious metals, GLD, which makes me wonder if we're not quite ready to start that bullish trend yet. Let me just mention this. I don't have a signal. I don't have any signals per se as a tradable opportunity on GLD, but we get into August. August and September tend to be seasonally bullish for precious metals, for gold and silver. So we're going to put that one on the back burner. We'll take a look at it again in about a month as we're getting close to that signal. We'll see where things are, see if we can't put something together between the 1,000 plus of us. How about that? All right, guys. So that's GLD. Now, Eric, there was a stock
Yes,
that we
Tom.
were going to talk about here. We mentioned it at the top of the hour. Do you remember what that was?
Do I remember the stock we were going to talk about? Was it the? I don't remember, Tom. I don't remember, Tom. Thanks, man.
That's okay, buddy. I'm going to ask everybody in the room. Anybody in the room want to know? There we go. Eric's on the ball. The shirtless trader. You know he's a shirtless trader because he's in Florida. And we've been getting a lot of rain here in Florida here lately. So, the droughts that you keep hearing in much of the U.S., it's not happening in Central Florida, that's for sure. We're getting our share. The lake is filling up over here on my side of the state. So Eric said LNER. So let's take a look at LEN right now. Okay, LEN. And so for that, I'm going to move right back to my stock charts again. We're going to use the same area for charts. I'm going to look at Fibonacci. I'm going to look at what we call our dotted line support resistance. That's something we call stock chart peaks. We're obviously going to look at price. We're going to look at volatility because that is what we do on Tuesdays. So here's LNER. Let's take a look at LNER, L-E-N. And there you go. So LNER and the home building industry has literally been dropping since the beginning of the year. You take a look at LNER. The high on LNER was back for the year was back at the end of January. We were trading at $97.52, and we've literally been in a straight line moving down. Thursday, we hit a low, a lot like the rest of the market, but this has been running pretty good. You're a third off right now, okay? Prices are a third off in LNER. Something that's trading near 100 at the beginning of the year that dropped all the way down to 65, that's a third. You've shaved a third off the price, maybe a little bit more than a third off the price. So where do you go from here? So everyone knew with home building that if interest rates were going to rise, that was going to put some pressure on home building stocks. That wasn't the only thing that pushed pressure on home building stocks, folks. All right. You know what else pushed pressure on home building stocks? Commodity prices. It was a 1-2 punch. It was a gut check. LNER got hit from the right. All right. Got an uppercut from building prices of building materials, and then got hit from the left from the Fed raising rates. Now, some of you might be saying, hey, you know what? I heard lumber's down quite a bit. It is, but that's the futures markets. That's for future delivery, okay? Right now, and I'm not saying LNER's going out there and just buying lumber, paying cash. They are a big company. They go out and pre-order a lot of their lumber, but a lot of their lumber was already pre-ordered early in the year at the higher prices. So it's going to be a few months before they start buying lumber at the lower discounted prices right now. Okay. And yes, this was a Mike Tyson caliber type of punch, Ohio. It certainly was. So when you take a look at LNER, I'm looking at LNER two different ways. Okay. Let's look at LNER as an investor. As an investor, you can see the price has come down a third from where it is. Now, is LNER going to slow down housing, going to slow down sales of houses? Yes. Yes, they are. I mean, guys, I look at LNER Homes. I'm in the thick of LNER Homes. If you live anywhere, Tampa, all the way down to, I want to say, Fort Myers, you're passing by a number of planned communities that are LNER planned communities. They're everywhere. In fact, I think it's safe to say if you live in a LNER house and you come home at night, you might end up at the wrong house because a lot of them look the same. Okay, there you go. I said it. Planned community houses look a lot the same. So, but the thing is that, again, with interest rates going up, all of a sudden, this house that you could afford last year, that you could get a mortgage on, that was not a balloon note, a big mortgage. It qualified under the $600,000 range, $750 range. These houses have stepped up a lot. They have stepped up in price big time. And all of a sudden now, you know what used to be something that someone could use as a first home or a second home right? All of a sudden now, that's for the cash buyer, right? Those 500,000, the days of those $500,000, $600,000 houses, in planned communities, they're now got to be 8, 9, 1 million plus. And all of a sudden now you've taken an entire segment of the population out. And you know what? Who's moving in these now? Retirees. Okay. How do I know? I just sold a house it's under contract. Hadn't closed yet. Cross my fingers. But cash offer to an older couple. This older couple is just two. We're talking husband and wife. Why are they buying a 5-bedroom house? You know why? Entertainment, letting the sons and daughters in, having room for the grandkids. That's what they're doing. All cash deal. So that's what's kind of happening with a lot of the planned communities in Florida. All right. So there we go. Let's go back to look at LNER here for a moment. Quit looking at my ugly face. And you can see here, 97.52 all the way down to 65. So as an investor, you got to think, all right, if I like LNER, if I like the home building sector, I got to be in it for the long term, because what's going to happen? We're going to have to see a series of events that happen. Either A, we stop slashing interest rates, right? What's going to happen for that to occur? Well, guess what? The economy is going to have to cool off, which means jobs are going to have to cool off, which means we might see unemployment go up versus down, right? So there's a lot of little Goldilocks things that have to go into the porridge to make this turn around. But eventually, long term, LNER is a fantastic company if you want to be in that space for the long term. As a trader, however, I look at things like surges. And if you see here, I'm going to point to a couple different areas. Look at what LNER did. And this is about 2 weeks prior to earnings. So the stock was in the low 90s, and then it popped down into about the mid to high 80s before its earnings. But you can see that volatility, and I'm looking at the right side, went from just above 50 to close to 68, 67, 68. That's a big jump in IV. All right, come to what's going on now. 2 weeks ago, LNER in the 70s, all right, from the 70s to the 60s. All right, so it dropped a good bit. But guess what else happened? That IV went from 45 to above 70. Big jump in options implied volatility. Now, we could look at this in a couple of different ways, right? We could just pull chart after chart after chart up and try to spot these patterns visually, which is what I do, but I like to do that after the fact. I like to have my good friend Brutus come in and scan all this stuff and say, here's a pattern, there's a pattern, here's a pattern. This happened 4, 5, 8 times in a row. And then I'll pull the chart and take a look at it. The reason LNER is on the screen today is because this is the one that everybody's looking at. Everyone's looking at LNER because whatever LNER says, more than likely is going to move the home building industry this afternoon and tomorrow. So what I like to do is, what I like to do, guys. I like to buy that Super Bowl ticket early. I like to buy that Stanley Cup. Go Tampa Bay Lightning. I like to buy that Stanley Cup Finals ticket weeks before everybody else. And then I want to sit out there in front of the stadium. All right. I want to sit out there in front of Amalie Arena. All right. Where they're hoisting the Stanley Cup from years past. I want to stand out there and I want to say, who wants two? Who wants two on the blue line? Minutes before the game starts. That's what we do. That's exactly what we do. That's the best analogy I can give you, is that we look to buy tickets before everybody knows about them. Hey, it's great to buy tickets to the Stanley Cup Final when you don't know who is even in it. And then what happens? As they advance from quarterfinals to semis to the finals, then you know who the two teams are. You show up in that town, you get in front of that stadium, and you're selling tickets. Or, even easier, StubHub, you sell them that way. Okay, so I'm doing the same thing here, though. I'm doing it in the stock market, right? And I want to show you in a little bit exactly how we do this and how we break it down from what you can do at home to what you cannot do at home. So I want to show you both ways that we put all of that information together. So LNER, I mean, you know what? Pink says home builders not looking good for the rest of summer. And you know what? I agree with you, Pink, because it's going to take more than one quarter. Even if even if LNER comes out and says and beats their expectations, their outlook may not be so good. They're going to need a few months. They might need a few quarters before we get an idea where this is likely to go, right? But from here, I want to go into as a trader and figure out how can I trade LNER in earnings? How can I trade LNER through the earnings season? Now, every week here on Tuesdays, we talk about Operation Surge Strike. And Operation Surge Strike is our strategy du jour that spots stocks that are coming into trigger events. Eric, I'm going to say it right now. I'll say it at the end of the program, but I want to say it right now, guys. I heard just like you, I heard a commercial that popped up in between, but right before my session came up. You know what I heard? I heard $500 off any publication right now with Money Map Press. You know what I did not hear, Eric?
What's that? What'd you miss out on? Did you not hear specifically your name? Your name should have been part of that.
Where's me?
Well, let's make it official right now, then, Tom.
Let's make it official right now. Anything that we have right now in the franchise, it could be Operation Surge Strike, it could be Quantum Data, it could be Rocket Wealth. All right, our big stock strategies, stock option strategies, all doing well this year, by the way. Any of those three, take $500 off. All right, I don't care if the commercial didn't have my name in it. I'm telling you right now. Where's Gabe? Is Gabe in here? Where's the goat?
Gabe's always around. He's always around. I better modify this to say all services, services.
It does. You know what, though? It does say, and Billy put it up there on the screen, and also there's an announcement by me, all right, that says $500 discount. Just got to make sure. I need props, Sometimes they forget about me.
When they forget, you got to give yourself the props. You did a nice job.
Eminem said they forgot about Dre. Money Map Press forgot about me. Anyway, guys, there you go. So you know what? And let's get back to LNER for a moment. But I want to make sure that I pop that in there for anybody who was concerned. Hey, what about Tom? Is he not a part of this? Well, yeah, I am. And if I wasn't, I am now. So the thing is that with this particular strategy, we're taking advantage of implied volatility. This is a volatility sensitive strategy. Just real quick. I get it all the time. Why do you have 3 publications? Why not just have one that trades everything? Why not just pile? We had a nice weekend grill out here at the Gentile compound, and we had hamburgers, we had hot dogs, we had chicken, we had steak, but you can't throw. Well, you could throw all that on the grill. Eric, do you throw everything on the grill at once?
It depends. I don't really like to mix the fish on the grill with the steak or with any of that, but I would put the chicken and the steak on at the same time. You're in agreement.
Exactly.
Right.
You said it right, because what's going to happen is you're going to get the fish smell in the steak.
Yeah.
You get the steak smell in the fish. Everything's going to taste the same.
Agreed.
If you're going to really cook it right, you got to cook everything separately, and that's a pain in the butt, And me, what did I make yesterday that everybody liked? I made, here you go. You ready? This is me on the weekends, guys. With the hat on, with the apron, and I was cooking up chicken, Asiago, linguine with mushrooms. Put a little thyme in there, thyme, whatever we call it.
That sounds fancy, Tom. That sounds good.
I use that grill mate because that's just basically a combination of all the spices I like. And then I threw it in a nice some chicken stock. That's we put the put the pasta in a chicken stock, and then add a little milk in there, creamed it up. Man, it was great. It was awesome. Everybody said, "Man, how does this taste so good?" And I said, "It's real easy. You don't put the chicken in with the pasta. You add the chicken on top, and then you get the chicken taste and you get the pasta taste. It's 2 different tastes hit your mouth. Fantastic." Okay, so what in the hell has that got to do with trading? Well, when you're looking at 3 different types of strategies, I have 3 different types of strategies. They're completely different. What's the difference between Operation Surge Strike and Quantum Data Profits? Operation Surge Strike is implied volatility sensitive. Quantum is stock momentum sensitive. Rocket Wealth, probability. We look at statistical probability, okay? All 3 have different ingredients. All 3 taste great, all right? but they taste great separately. They do different things. One strategy, Operation Surge Strike, typically 2 weeks or less. Quantum, typically more than 2 weeks. And Rocket Wealth, we're looking at on an average of 2 months. So they all have different, they have different groups, they got different recipes, and they end up coming out differently, but all of them doing well, just different strategies, guys. So with, again, talking about volatility and how we like to trade volatility. So, we talked about straddles, and I'm going to get to that and how we can provide kind of a built-in hedge. But I want to show you how it is we go in and look at Operation Surge Strike and how a trigger event like earnings affects things like price and volatility. So, Eric, I want you to throw up that image about how earnings will affect a stock price.
Got you covered.
So I want to show you a couple different things. Now, you can find this data, all of you here. You have the ability to find this data. You might not be able to put it all together real quickly like I can, but this data is out there, okay? This isn't some secret data. Everybody can get a hold of earnings data. Everyone could chart a price of a stock heading into earnings, and maybe you could see a pattern where something goes up or something goes down. Like, for instance, with LNER, I had that on the screen. The last 2 quarters, the last 2 earnings cycles, we saw the stock price gravitating down. But you know what? Is that LNER? Is that the entire market? Is LNER following the market, or is LNER doing its own thing? Right? What we do is we look at each of these. We look at each of these onto its own. So we look at those 3,000 stocks, and we pull out those that have patterns that are going up, those that have patterns going down. And if you look at what I'm showing you now, so what this is a kind of an idea of how we look at this, how earnings affect the stock price chart. So let's just call this XYZ. So if we look at XYZ, I'm going to look at a couple of things. There's a yellow highlighted area that says 5.61 in there. That tells me that this particular stock has gone up over 5.5% during that 1 to 2 week sweet spot right before the earnings come out. 3 of the last 4 quarters, it's rose in price, right? And then we get all the data we need to determine whether or not we want to go in and do this one again. So in this case, 75% of the time, stock price moved higher, and it moved an average of 5.61% higher the week before earnings. Now, Eric, I want you to put up the next piece of data. Now, this is a piece of data that, you have to have some implied volatility. You have to be able to get IV to be able to chart this. Now, this is something that a lot less people have access to, but if you go out there and you have a good piece of software that looks at implied volatility and can chart it on average on each stock, then you might be able to put this together too. So options implied volatility is really it's the time value of calls, it's the time value of puts, and the time value of straddles. And we put that information together. We look to see if people are buying time as we head into an earnings event, or selling time. And with this particular example, if you look at the first column that's yellow, which says best IV median percent change, that means that the stock in question, we'll call it XYZ, has gone up an average of 23% in the week prior to earnings. That's the surge we're talking about. And then that next column, you'll see that yellow that's highlighting a number 12, a number 18, a number 28, a number 71. Those are each of the quarters that implied volatility jumped ahead of its earnings. We get a little bit of other data too, like when is the next day to earnings and that estimated date of earnings release. But basically it's this. In this particular example, option IV almost always rises the week or two before the surge. And the implied volatility in the example above is showing us an average of 23% surge, all right, before that trigger event. So we take advantage of all this, folks. We take a look at calls, puts, straddles. So far this quarter, it's been mostly straddles. Now, Tom TT, he might be in the room right now, but
he's a fan.
Left us a little note. Eric, what's he got for us?
Yeah, Tom TT's a fan of straddles. It seems so far the straddles are the best to date. The worst loss that he had on a straddle was 18%, and he got a few thumbs up for that comment as well. So
nice.
Nice.
So you know what? I mean, and straddles, one of the big things about straddles are it's a double-edged sword. The bad thing about straddles is you're paying the most you're ever going to pay for an option because you're buying both a call and a put. This is not a spread per se where you're buying one option and selling another. You're buying two options at the same time. One that you're having expectations the stock's going up, and one you're having expectations the stock's going to go down. But we're not buying it for that. We're buying it because we feel like the angst and the fear and greed is going to push one or both of these higher, where you can get out of both the call and the put and make money even before the move happens. That is one way you can mitigate risk and maximize your trading strategy, your trading capital. Now, Eric, let's bring up the exit instructions from Kroger last week, because we had a trade in Kroger.
Okay.
Let's go ahead and bring that up.
Sure, I'll take everyone through this one really quickly. Yeah, we had the exit instructions. They came through the email of all the members. It says at 3 o'clock Eastern Time, place the following order. Sell to close the KR June 17th, 2022 $52 call, and sell to close the KR June 17th, 2022 $50 put at market price. If you're a seasoned trader, consider working the spread. We're going to learn a little bit about what that means in a moment, and using limit orders at mid price and then reduce the limit price until filled. So Tom, we just heard here the order, but why don't you fill us in a little bit about what working the spread means for some of us that may not understand that depth yet?
Yeah, so let me mention two things first real quick. If you take a look, I put Kroger on the screen. All right, so let's work with Kroger here. But if you take a look at Kroger, this was the day that we talked about this. All right, we talked about this before the earnings announcement. Now look what happened. Earnings were announced, and here's the thing: earnings came out and they were a bit higher, and the stock opened right, literally where it closed. Now I'm going to tell you what happened. Option traders that held that through earnings lost money because the call and the put were pretty much right where they were, right there at the money. Now, if you'd have been smart enough or lucky enough or dumb enough, depending on how you face it, to hang on to it to the close, you probably made a little bit of money. But then again, that's not typically what happens with folks. You know, people that hold on to earnings, they're waiting for that gap move, Eric. They think that the stock's going to gap up or gap down, and they're going to make a lot of money the next morning. That did not happen with Kroger. And so we look to get out right before the event happens. Now, you're talking about mid-price and working the spread. This is something that I do a lot of, right? So if I'm in a position, let me throw Kroger up on the screen right now. So we're going to go type in KR, and I'm actually in the Street Smart Edge platform, which is Charles Schwab, right? And I'm going to bring up straddle. Now, we're going to be looking at something completely different. We're looking at today's prices. We're looking at something that's completely now after the fact. So if I were looking at putting a straddle on in KR, and maybe I'm going to look at the straddle that goes all the way out to July 15th, right? So where are we at right now? That puts it at around a 4-week straddle. Okay, so we got 4 weeks to expiration. And so if you notice, I'm buying to open a 48 call, and I'm buying to open a 48 put. Now, the 48 call is, again, it has its own price. For those of you that are new, okay, I'm talking to you. It has its own price. Right now, it's bid $1.71, offered $1.77. This area here, so that's the bid, that's the ask. If I were to hit the button and try to buy this at the market, I'd be getting filled here at the $1.77 area. And if I were to want to sell this at the market, I'd be selling it at $1.72. This mid price, this tells me, okay, if this is my bid and this is my offer, where's the middle? Where's some middle ground that we could, maybe come together on, meaning me and the market maker? 175 is the middle. And so that's the 48 call. The 48 put is 151 by 156. 154 is the middle ground. So if I were to go out there and purchase, for instance, if I were to purchase the call and the put, and I were to put this at the market, I mean, I could tell you right now what that's going to end up costing you. It looks like that's going to end up costing you. Let me go to my $1,200 calculator here. I really need a cheaper calculator, Eric, one that doesn't involve me going and using the phone.
It's quite fancy.
177 plus 1.56. So the market price is $3.33. but the mid price shows at 327. You know what? I didn't need the calculator because on this particular order ticket with Schwab, it shows me what the straddle is going to, what it would sell for immediately and what it would buy for. 333 is what it would buy for. But 328 is that mid price. So if you're looking to save yourself 5 cents, okay, what's 5 cents? That's $5 on the trade. That's on a contract. If you did 10 contracts, that's $50. If you did 100 contracts, that's $500. That's some pretty decent savings. So here, how do you do that? Couple different ways. Number one, we can just put a limit order and say, you know what? I want to get this for $3.28. So 3.28, that's one way of doing it, right? That's called a limit order, folks. Another way we could do this is something called working the spread. Working the spread, if you have you have a broker like a Charles Schwab that allows you to work the spread. Let me show you what they do. Right? What they do is they have something called a walk limit. So this walk limit, what this does is this will automate the process where you can work the spread. And what it does is it will start right in the middle. For instance, I have a start price. This is right in the middle, 327, and it'll end at 333. So what it'll do is it'll start in the middle and it'll throw your order out. I want to buy this straddle at $3.28. Now I'm going to hit the customize button for a moment because I want to show you how this works. 328, and then every 2 seconds, if it doesn't get filled within 2 seconds, Eric, it's going to pull that order back and cancel it, and it's going to replace it with a 329. So, hey, anybody out there want to take my order for 328? 2 seconds, 1 second. Okay, back. All right, how about 329? 2 seconds, 1 second, and then back. Okay, how about 230? And that's what walking the spread does. It's going to take it from a price that you want it at. I mean, you have to ultimately want this trade. And you can set where you want to start. So maybe you want to start at 325. And you can also set where you want to end. Let's say you don't want it at the market, but you're willing to do it for 330. So what this is going to be is it's going to be potentially 5 separate orders, Eric, where we go 325, 326, and then you hit this thing and it does all the work for you. And either two things are going to happen, one or two things. Either A, you're going to get filled somewhere even in between 325 or 330, or B, it's going to sit out there as an open order at the end price until possibly it gets filled or you cancel it at the end of the day. That's what's called working the spread, folks. All right. Eric, any questions on working the spread?
No questions came through on working the spread. We do have some other questions that I'm trying to grab as we go because we're going to be getting to that section of the show. Are you ready to move on to that?
Well, you know what? AJ threw a something up. He says, "Yeah, I'm not sure if Thinkorswim has it. Thinkorswim does have a version of a way to go in and Now, I'm going to tell you something about Thinkorswim. I like Thinkorswim. I like Thinkorswim because it's you have the ability to actually program in scans if you really want to get that deep. I have people that do that for me. But, you can go in, you can program in your own buy and sell indicators right there within Thinkorswim. And I have a few of them. But it's pretty daunting when you get past the buying at the market and buying at the limit for other things that Thinkorswim does. I would suggest they don't. So L11 says they do not have a walk the spread feature, but they do have some interesting advanced trade strategies. So I would say contact them and let their folks tell you what they offer. Right. This particular one that you see on my screen, this walk limit, this is really, you know what? You can't really congratulate Charles Schwab for figuring this out. This was Options Express, who Charles Schwab bought, that had the walk limit. They said, wow, we want this technology for our active traders. And that's what, so I congratulate the folks in Chicago over at Options Express that put this together. And if you really want to go deep, how many of you in the room, let's see, we got some old school traders in here. Who remembers Express Trade? Does anybody in the room remember Express Trade? All right. And it started with Express. Didn't have an E in it. It was Express Trade.
Oh, clearly I'm not one that remembers it then, Tom.
No, but you know what? I think you got to go back into the late 90s before you see Express Trade. So there you go. All right. And A Phoenix, thank you very much for the comment. I mean, it's important that those are the folks in the room who know what we're doing. You know, uh, they've got it under the wing. But those of you that are brand new, I'm going to continue to just show you different ways that we place orders as we go forward. What's walk limits, what's limits, when to do markets, when to do stop orders. We probably should talk about stop orders one day too. I love stop orders on short-term trades. And we'll talk about that. We'll talk about that in one of our sessions going forward. All right. And John, Mr. Optionetics. I hear from Optionetics students all the time. Those of you Optionetics students, I want to thank you for being there, not just for years, but for decades. I got pictures back in the old Optionetics day, and I look at myself and I went, what the hell happened? again, an area that that we don't have that kind of time to go through. All right, so how about some chart Q&A, Eric?
Yeah, that sounds.
Want to do some Q&A and some charts?
I have one question I'm going to grab here from Danny because this came in a little bit ago, and he says, if you give trades, you use straddles, ? Do you give trades using straight options as well? And after this question, I'll be looking for symbols in the chat for Tom to take a look at.
Yeah, absolutely. And so that's a big yes. Okay, but the thing is that when the market gets volatile, for instance, so we'll talk about Operation Surge Strike here. So with Operation Surge Strike and with Quantum, we do a lot of call buys and put buys. The difference is that with Operation Surge Strike, we'll only do a call buy if we see a pattern where the price is going up before the trigger event and implied volatility. We'll only do a put buy if we see price typically going down and IV on the options going up. We'll do a straddle if we see price wiggling, but implied volatility going higher. Now with something like Quantum, what we'll end up doing is we will look at momentum. And if momentum is there and the IV is cheap enough, we're buying calls to the upside. We're buying puts to the downside. But folks, IV has not been cheap for most stocks out there, which is why we're doing spreads. I know a lot of you don't like spreads. I get it. Maybe it's a level higher than you want to go. Maybe you just don't like the idea of buying something that's hedged. I get it. I would implore you to understand why we do spreads. I've shown time and time again where we do a high probability trade and we do a high profitability trade, especially we've been doing that over the last month or so with QDP. And there has been times where the high probability trade worked and the high profitability trade either didn't work as well or it didn't work. And so if anything, you would learn a lesson right there in probability, volatility, and why we use spreads. All right, Eric.
Thanks,
look at
Tom.
some stock.
Yeah, let's take a look. I got a couple coming through here in the chat. How about YRS, Tom? You want to take a look at that one?
Let's see, YRS. Now, again, folks, the first thing I got to look at when I'm looking at a stock right here is, does it have options? If it doesn't have options, I don't want to trade it, and I definitely don't want to look at it. So I apologize for the ones that want to look at these stocks, but I really focus my time on just optionable stocks that give me different ideas of how I can trade around other than just buying that stock.
All right, well, let's give it another shot then. Let's try out MCO. Let's see if that one's an optionable stock.
Isn't that like Orlando? MCO sounds like the code name for an airport. I think it's Orlando.
Could be.
Somebody tell me, is MCO Orlando? But MCO is Moody's. All right, Moody's is the service that will rate bonds. All right, and so Moody's service, again, investment advisor service. They've got earnings in 36 days. They have dropped. They were as high as $350 a share back at the beginning of the year. Dropped down to $250. This one's a third off. It got a little bit of a bounce today, but even Moody's down. The trend is down. I mean, you've got resistance just above 280, and then you've got the 290.50 area, which is going to be that blue line you see here. All right, that's your 38% retracement off the bottom that we had, the closing bottom on Thursday. All right, Eric, what else do you got?
Let's take a look at Myrna, MRNA. It's one I hear Kenny
Oh,
talking
before we
about all the
do,
time.
was I right? Yeah, MCO Orlando. I know my airports. I
You're
know my
good.
airport codes.
You
I don't
travel a
know them as
lot.
well as I used to. You know, I live near the SRQ. I end up going through the ATL because when you live in the SRQ, you got to go through the ATL to go anywhere. In fact, the only way to get to heaven, if you live in Florida, is to go through Atlanta. That's a terminology that a lot of the retired folks use here that travel. If you want to go to heaven, you gotta take a layover in Atlanta. Um, Myrna, mRNA. Let's do it. And so here is Myrna. And Myrna is definitely an optional stock. It's one we've done Moderna. And so Moderna's been a lot like this industry where it was higher in March. It bumped up in March and then it started to trend down. We went from 186 in March to what was it, Tuesday, Wednesday, 117. This thing got hit hard, 40% off the highs in March. Getting a bounce. All right, we bounced off 117. We're at 132 right now. I want to share with you, those of you who are interested in this one, take a look real quick. Look at what you got. We have now passed above the first area of resistance. All right, where's that area of resistance? Just above 130. The next area is going to be just below 135. And then from there, you've got, this is the 135. This is the 143 area. This is the 38% retracement. Okay, 38% retracement there for this particular stock. All right. So I got some things lined up, everybody, for today. So those of you in the room that are Operation Surge Strike members, who in here is going to be with me at 1 o'clock today? All right, we're gonna kick that off. We're going to be taking a break here between the end of this session and 1 o'clock. But I got to tell you, if you're there, come on back. I'm going to be in the room. Mike Wade's going to be in the room. If you're new to Operation Surge Strike, I'm going to be talking to you, right? Those of you that are brand new, because a lot of you saw what we did over the quarter, right? And over the quarter, we had a good quarter, right? We had a couple of trades that went against us here recently, but very, very small numbers. This wasn't 100% losses or anything like that, right? I'm going to explain how we keep the losses to a minimum with Surge Strike. There's a big, big reason. I want to talk about that at the beginning of the program, but I'm going to be here. Mike's going to be here. We've got a lot of that happening. We're going to talk about Brutus, and what I want to also do with you, those of you Surge Strike today, we're going to take it next level. We're not going to talk about not just earnings, how earnings affect price and how earnings affect implied volatility, but I want to show you the actual code, the actual checklist that we use on Brutus. How Brutus does the first pass and goes through all of these optional stocks, 3,000 plus, and brings them down to just a handful of stocks that we are able to trade. Calls to the upside, puts to the downside, straddles. And by the way, this particular service we do, Operation Surge Strike, that's pretty much all we do, guys. All right. When we're going into a trigger trade, calls, puts, and straddles, that is it. All right, so those of you are going to be with me at 1 o'clock, take a little break. Those of you are not, I'll see you at 11:30. And let me say this before we go. Remember, I said at the beginning of the program, somehow my name was left out in that commercial of the $500 off credit. I'm giving it to you. Ask Gabe. Say, Gabe, I want the $500 credit through today, and I want it on Tom's services. So give us a call if you're interested in picking up one of those services, any of the services that I have. Otherwise, guys, I'll be back here again tomorrow at 11:30, and we'll be talking momentum then. See you tomorrow, same time, same place. I'm out of here. Bye, everyone.